Hello guys, welcome to the next class. And for this class, we're supposed to start teaching you trading strategies that you yourself can use. Remember, I promised that I'm going to teach you trading strategies that you yourself can use in the market and be able to make consistent profit if you stick to the rules I'm going to be explaining to you here. So for this class, we're going to talk about one very important trading strategy that you can use as an intermediate trader that can give you a conceptual understanding of what the market is doing currently, help you understand where you want to enter, what the market is doing, and how far you want to stay in the market. Now, this strategy is very important because it is used by some of the biggest traders in the world. Regardless of the popularity of the strategy, it still works very effectively. It can give you a good risk to reward ratio, and as an intermediate trader you can be able to make consistent money with this strategy regardless of how simple it might sound. Now, this strategy is simply called Trendline trading strategy. Trendline trading strategy. And for trendline trading strategy, we basically have two types of trend. We have bullish trend where the market is going up, and we have bearish trend where the market is going down. So this trendline trading strategy is going to teach you the time where there is a bullish trend and a time where there is a bearish trend. Now, trendline trading strategy, let me give you an illustration here, and we'll go into the chart and we see how trendline trading strategy works. Now, what happens is that when the market is going in a bearish direction, it goes like this, forming lower low and lower high, 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 lower low and lower high. Now, for this bearish movement, we want to use this tool called Trendline tool to identify that there is a trend forming on this level. On this level. Now, some of the misconception that people have is that the trend must follow exactly the tip of the market, or exactly the tip of this high, this high, this high, this high. The trend does not necessarily need to follow, the trend line does not necessarily need to follow the tip. It can also follow through the body of the candle before, and so long the market remains below the trend, the market is still moving in that trend direction. So you need to pay attention to what I just said. So long the market is still moving below the trend, the market is still moving in that trend direction, or above the trend in a bullish scenario. So you can always identify it here by typing on text and saying sell trend, so you can easily tell yourself that, okay, this is a sell trend. Now, for the rules of trend line, the number one rule is that you want to start your trend line from the first high down to the second high. So once you're drawing your trend line, once you've gotten the first and the second high, you can now go to settings of the trend line and ensure that the the style is extended to the right hand side. So once I extend this trend line to the right hand side, you are going to see how the trend line goes all the way to the right hand side. So once you've picked your first significant point, then your second significant point for the trend line, every other thing following below the trend line is going to be where you're going to start looking for your entries. So we have, for this area, we call this first significant point point A. We call it what? Point A. We call it point A. We call the second area, we call it point B. So once you've gotten your point A and your point B, then you can now start moving. You can now start looking for entries from point 1, point 2. So point 1 means that your first entry, which will be number 1, You can now get another entry from your second level here where the market comes back to the trend line, number 2. You can get another entry from number 3. You can get another entry from number 4, so long the market continues to go in the direction below the trend. So what you want to do when you get the first entry is that you want to take your entry as the market touches the trend line and ensure that your take profit stop loss is somewhere significantly above this point B or above the trend line in itself, which is this trend line here. You want to ensure that the market is significantly above the trend line here. Then your take profit should be at this previous low here. So that's the very basic rule of trend line. So you can take a screenshot of this example. This is your take profit at this level. You can take a screenshot of this example that I just gave you. If you are entering from point number 2, your take profit should be here and your stop loss should be significantly above the trend line. Maybe there will be a little high here. You can put your stop loss above that high. I'm going to show you in the chat using live examples, and we're also going to give you some entry. See your take profit here. The same thing with point 3, which is here. The same thing with point 3, which is here, and so on and so forth, so long the market remains below this sell trend or bearish trend. We can also call it a bearish trend. So your take profit will be below this last low as the market continues. So the market can have scenario where it comes and it starts breaking out of this trend. We'll call that trend line breakout strategy, and I'm also going to teach you how to trade trend line breakout strategy. But for the basics of trend line, this is an example of a very good way to take a sell trade in a sell trend. Now if we have a bullish movement, for example, let's say we have a bullish movement coming out of this area. The bullish movement is forming higher high, lower high, higher high, lower high, higher high, lower high, higher high, lower high, and so on and so forth. The same way we want to use our trend line tool here. We want to draw the trend. We ensure we put it here and we ensure it's raying continuously to the upside. So you want to ensure the market stays above this trend line. You can always label it as a buy trend. So for the buy trend, our point A will be at this first point here, point A. Our point B will be here at this second point where the trend line has been confirmed. So from point A to point B, you must have already known that yes, the market has started going higher high and it's no longer going in a sell direction. So we want to start our first entry from point 1. Our next entry, our second entry from point 2. Our third entry from point 3, and so on and so forth, depending on how many entries we have along this trend line. So there are some other secrets about trading trend line, like this internal trend and external trend. I'm still going to teach you. Like as we have this trend line in point A to B, we also have a trend inside of it, which is this trend line going up here that broke out to form this sell trend. We have this sell trend going inside of here. So these are the internal trends that are happening. Then let me change the settings and remove the extended line. I can always draw it here like this fully. For this too, let me change the settings and move the extended line. I can always draw it like this. So we still have internal trends that happen in the market as the market keeps going in this external sell direction. So I'm going to teach you how to use all these things. Now you can see our bullish example. We want to be taking buy trades from here and ensure that our take profit is above here and our stop loss is significantly below the trend line. So this is going to be another buy trade with a 1:7, 1:2 risk to reward. We took a trade from here, a buy trade. Want to take another buy trade at 0.2, which is here. 0.2, our take profit to be above the previous high and our stop loss will be significantly below the trend line. This is 0.2 and 0.3, 0.4, so long the market remains above the trend line. So let's go into the chart. Let's see some of the examples we have about trend line and see live examples about trend line. So for example, this sell trend here, we have here to be our point A, we have here, we can even use here as our point B, and you can see the market trading all from point B, point then number 1. So you can see the market has broken this previous low and went back up and did number 1 here. So we want to enter from number 1, which is here, put our stop loss above this previous high here and our take profit below this low. So we can look for a significant level, maybe we put our stop loss 1:2 risk to reward, depending on how we feel like we want the market to move or we intend the market to move. And you can see this very good example. So we have point A here, we have point B here, we have point 1 here, and if we get another touch around here, we have point 2, which is supposed to come out around here. You can see the market reacting around here, but instead we had a trend breakout. Now for the trend breakout, it resulted to another trend, which is like this trend moving like this, and you can see it, this trend line continuously moving. So we have another trend line continuously going all into this area. So we can see now this area has given us point A here, point B here, we have point 1 here. So we can even use here as point 1, we can use here as second entry, which is point 2. We can come here and use here as point 3, which is our third entry. So you can see it forming out clearly. We want to put our take profit somewhere above this previous high, and if we are traded from point 1 or point 2, we would have gotten a very good trade, which led all the way, look at point 1, point 2, which led all the way to this buy movement. So that is basically how to trade a trend. Let me see if I can give you another example. So we have another example here, all the way from this area, so which is the last low. You can see it, how the market move. If you can say this is point A, this is point B, point 1, and we enter and we got a very good movement. Then let's see if we have more examples. More examples keep coming. You can see simple trend line trading, point 1, point 2, point A, point B, point 1. You can see point 1 where the market hits point 1 and the market sold very fast. So if you are taking this trade from this point 1 here, or this first entry here, and put your stop loss significantly above, and you have gotten over 1:6 risk to reward. But this is very rare. What is mostly attainable is 1:2 risk to reward, and you would have gotten a very good trade that way. Let me see if we have another example here. We have another example here. This is point 1. You can see point 2, point 3, point B, point 1. So this is point A, point B, point 1 should be around here. You can also use this as point 1. If you had bought around here, you would have caught the final movement. So we could even have as much as, after point A and B, we could even have as much as fifth entry in a trend. The market can continue trending up to the fifth entry. Now another thing you want to, as I said, I'm going to tell you about is the trend inside of a trend, which is the internal trend. So I want to delete all of this, excuse me. What do we now mean by external and internal trend? Now the whole concept of external and internal trend is just you trading an higher time frame trend on a lower time frame trend, trying to catch the pullback of the trend. Now what do I mean by all that? Now you can see that if you have a trend line like this, let's say this is a bearish trend, there is a tiny movement of trend moving here that you could actually trade from point 1 around areas like this. So we might have point A here, so this could be point B, so you can have point 1, point 2, point 3 until this higher time frame trend changes. You now have a bullish trend like this until you now have point 1 again, point B, point A, point B, point 1, point 2. You now have another bearish trend. You have point A, point B, point 1, point 2, point 3, and so on, as much as it will give you. You now have another bullish trend, but all of this is happening just on the higher time frame bearish trend. So you can be taking internal trends as the market is moving on higher time frame external trend. So what do I mean by that? Let me show you an example of what I mean by that in the live chat, so that you too can see it and be able to use it in your own trade. So what I want to do is I want to go to higher time frame. So we have 3 different time frames, or we divided our time frame bias into 3 different time frames, which is higher time frame, which serves from monthly time frame, weekly time frame, daily time frame to 4 hours time frame. Lower time frame, which is from 4 hours time frame, 2 hours time frame, 1 hour time frame to 30 minutes time frame. Then entry time frame from 15 minutes time frame all the way down to 1 minute time frame. So we want to go to higher time frame, let's say for example 4 hours time frame. We want to go to higher time frame on 4 hours, and we want to see what the trend is doing on 4 hours time frame. Now you can see on 4 hours time frame we have a very good trend here. So the market is coming, this is point A going down, point B going down, point 1, we start catching entries from point 1. So we now have the trend moving all the way like this on higher time frame on 4 hours time frame. So since we already have this on 4 hours time frame, we can easily label it 4 hours. So 4H 4 hours trend. So we now know that this is a 4 hours trend, 4 hours time frame trend. Now we want to go down and catch this movement from here all the way here. So we have this sell movement, let's say from here we have this sell internal trend line. We also have this internal trend line on the 4 hours time frame. We have this internal trend line. We also have this internal trend line, let's say from here we have this internal trend line. We also have this internal trend line serving as a pullback. We also have internal trend line at this area here. We can also see another internal trend line at this area here. We can also see another internal trend line at this area here. We can also see another internal trend line at this area here. So if we already know that we have 4 hours time frame, and we know that 4 hours time frame is going to take longer to complete, so we can always have the 4 hours time frame at the back of our mind and go down to 30 minutes time frame, for example, and catch all possible movement on the internal trend. You can see the 4 hours trend line still showing here where we labeled 4 hours trend line. We can now go down to lower time frame and start catching all the internal trend lines. So we have point 1, we can call this point A, we have point B. Let me draw it very well now so that to sit on the trend on the candlesticks. So we have point A, point B. So we can start catching trend from point 1 on the internal time frame. See, this is a very good sell trend on internal time frame. We could have cut this entry 1, we could have cut this other entry 2, we could have cut significantly above our take profits here. 1:5 could have been very good. We could have even been able to get as far as 1:2. We could have been able to catch here even before the market changes direction. We would have been able to catch all these trend movements even as far as 1:2 risk to reward for this trend. You can see it. Would have been able to catch another trend movement around here too. You can see it too. Since I told you, so long the market is below the trend, it is still a valid trend line. And I'm going to teach you how to use indicators to catch movement like this, which is 200 moving average and MACD trading strategy. You could have also caught this trend line movement here. Then as we see the market breaking above, we now have our new point A, point B. So we now have here being our point 1 below point B. We put it below point B, we wouldn't have hit this stop loss. So we have our point 1 here, which is our first entry. We have our second entry. You can see now we are getting multiple entries just by going lower time frame to catch internal trend. You can see how. So for this internal trend, we know that the market has been trending all the way from this external 4 hours trend. We want to catch the market pulling back to the external trend. Now we are easily catching 1:2 risk to reward all the way back to this external trend. And once the market gets to that external trend, we want to be getting out. We don't want to be looking for trend again, because we know that it's on an external trend back, which is the 4 hours time frame trend. And we know that the 4 hours time frame trend is stronger than the lower time frame trend. We would have been able to catch this 4 hours time frame trend, which should have given us 200 pips. For this we have 80 pips, this we have 81 pips, this we have 76 pips, this one we have 90 pips. You can see the difference. This one we have 100 pips. But when we're catching the external time frame trend, although we still have the same risk to reward, but we are catching 200 pips movement for the main external time frame trend, and we would have been able to still continue catching internal time frame from point A, point B, all these areas inside of the external time frame. Continuous selling, 139 pips, continuous selling. Even here we might be able to have caught some internal time frame pullback to this other internal time frame trend. For that, just imagine, for that matter, we would have been able to catch here as point 1, which would have been a very good entry, and our stop loss below here. I would have been able to catch the next level at point B, which would have also been a very good entry with our stop loss below point 1 and our take profit here. So the market can continue like this. You can see this next thing, you can see this next movement, you can see this next movement. All the internal trends in the market, we can always catch them just by moving our entry from doing a top-down analysis from external trend to internal trend, and we can be able to catch all the internal movements in the market. So basically that's all for trend line. You can always remember that you have point A, point B, and point 1. Point A, point B, point 1, point 2. Point A, point B, point 1, point 2. The same thing. Next class, I'm going to be teaching you about trend line breakout strategy and how to trade trend line breakout. For example, this trend line breakout strategy, this trend line breakout strategy, this trend line breakout strategy. I'm going to teach you how to trade trend line breakout strategy. Have a nice day, guys.